Hi, I'm Gordon Ip, Head of Fixed Income at Value Partners. Just a little bit of introduction of myself. I have been with Value Partners since 2009, and I have more than 15 years of investment experience in the global fixed income market, ranging from interest rates, credits, as well as securitized products. The fixed income here at Value Partners consists of 9 investment professionals covering the entire Asian credit space, including Japan, Middle East, and the Commonwealth independent states, particularly Russia. Driven by investor desire for yield and our ability to provide unique products that satisfy those needs, we have seen substantial growth in our fixed income business over the past few years. Currently, our team is managing more than $2 billion of fixed income assets for our clients. Our investment philosophy is very simple. Actually, our name says it all. We are value-oriented fixed income manager, and our job is to find value in the global credit space through our rigorous process of bottom-up credit analysis. Our process is both quantitative and qualitative. First, for each mandate, there's usually a certain return or yield target. We scan our investment universe against this yield target to arrive at a smaller set of bonds that are candidates for inclusion into the portfolio. For those that are screened out, we will keep monitoring. But for those that are screened in, we will conduct rigorous credit analysis in which the issuer's credit and liquidity profiles, their business models and industry outlook, their financial statement, their management quality and track record, as well as relative valuation versus the peers, will be going through full evaluation in our intensive process. For those that have passed our stringent requirements will end up in our portfolio, and those positions will be monitored and evaluated on a continuous basis. Lastly, as we are an integrated team of both fixed income and equity professionals, the synergy between both teams really gives us better breadth and faster execution of ideas than many of our peers. We think Asian debt is attractive. From a fundamental perspective, implied default rates of many Asian issuers are being priced too bearishly, which don't even link close to reality. And distortion in the market are there for those who want to find them. From a technical perspective, Asian debts are primarily owned by Asian investors, who are very familiar with their own issuers, which make them more steady hand of bonds. Therefore, Asian bond markets often tend to be more resilient than some of the developed markets. In fact, the stable performance of Asian debt markets amid the recent Brexit event provides a very good example of how resilient these markets are. We are very happy with the performance of the Premium Asian Income Fund. Since inception, we have been able to deliver our investors strong income of minimum 6% per annum with low volatility, and we have never missed a distribution. On a total return basis, we have achieved an annualized return of 11% with a volatility of 5.9% since inception, achieving a Sharpe ratio of roughly 1.8 times. This performance is a direct result of our rigorous credit selection process and also prudent currency management. Special situation refers to an investment strategy in which an investor will try to profit from a unique situation or event faced by a company. Those situations include, but not limited to, merger and acquisitions, refinancing, litigation, asset sales or liquidation, etc. This strategy requires extremely intensive analysis and close monitoring. However, if the situation works out to investor favor, these are highly profitable trades. We have been running a small percentage of the fund in special situation strategy, and it has been quite profitable. When there are opportunities, there are also risks involved. On opportunities, Asian credits, especially China property credits, offer good risk-adjusted value compared to credits in developed markets. Limited supply of bonds and ever-increasing demand for yield provide very supportive environment for Asian credits. A continuous low global rate environment also favors fixed income investment, especially high-yielding assets. On risk, investors should be mindful of more aggressive Fed rate hike and the development in Europe following the recent Brexit event. In addition, investors should also pay attention to any idiosyncratic credit events in their portfolio.